heart of the concern of inflation is really in the US because that's where we had huge outsized fiscal stimulus. That's where we have a huge bump up in household savings and a reopening effect. But I would have to say the inflation narrative in Asia is a lot more nuanced and a lot more divergent. I mean, you have pockets of the region that are doing fairly well, and maybe we could have a little bit of pickup in inflation. Your earlier reporter talked about Korea. But again, I still think the kind of inflation pressures are still manageable, and that will set the stage for Korea to actually normalize monetary policy by October. But I don't think inflation is the big concern. It's really more driven by financial stability consideration. But I would have to say for the rest of Asia, no one really did as large of a fiscal stimulus as we saw in the US. We still have issues of vaccine access for a number of markets. Yeah. We still have sporadic virus incidents. So I think from an output gap perspective, from a recovery perspective, I think the worry about sustained demand-driven inflationary pressures is less of a serious concern. So the main risk to the region is more to what extent inflationary pressures in the U.S. can spill over in terms of Fed policy tightening that then creates financial volatility in this region, because obviously Fed policy is so important for all the risk assets.
Precisely, Joanna. And I mean, this gets to the heart of concerns that what if the Fed doesn't have it right on the transitory expectations on inflation? They have to move more quickly than the market currently anticipates, and then you might end up with another taper tantrum 2.0. Is that something you worry about?
At this point, I mean, I think if anything, I think the June FOMC meeting was a bit of a hawkish surprise, and that obviously has been quite supportive for the dollar, because you can see to what extent the long end of the yield curve has behaved. I think a lot of people in the market believe that, again, if the Fed acts earlier, then the risk of sustained inflationary pressures in the Fed being behind the curve becomes less. But you're right. I mean, obviously, if the Fed is too slow and we have, risk premiums and term premium in the U.S. go up, that could create a lot of volatility. But I think the region is a lot more insulated now than where we were in 2013. We don't have the same amount of external imbalances. A lot of current account balances have improved significantly. That means the region is less reliant on external financing as a source of risk. Not to mention that the balance sheet is a lot stronger, and we don't have as crowded positioning in Asian assets and EM assets in general than we did back in 2013. So I think the volatility is manageable. Right now, I think the worry at the moment is one of the themes we're looking at is the risk of, still relatively elevated inflation. But I think there's an argument to be made that growth may have already sequentially peaked. So even if the IMF is already upgrading U.S. growth, I mean, I think we're already at that peak of expectation of fiscal stimulus in the U.S. And I think we're already seeing signs. I mean, take a look at China, for example. Growth is already, I think, sequentially slowing. And I think the worry we have a little bit is we may be migrating towards a little bit of a slowflation, somewhat of a slowdown. Of course, U.S. is still doing relatively okay. And then you have a taper environment where you already have a bit of a slowdown in growth.